So Bitcoin hits a new all-time high. Everyone is talking about it and so are we. But it's not only Bitcoin that is seeing the FOMO right now. Altcoins are doing really good as well. Ethereum is also waking up. So let's talk about what is happening with crypto for the coming weekend and for the next week. This is Crypto Corner. Let's get started. Alright guys, welcome to another episode of Crypto Corner with myself, OJ, crypto analyst and investor for the last 10 years. This is your go-to place for all things crypto, and today I'm going to look at the price of Bitcoin, of course, as we enter the weekend, and we're going to look at some target prices. Also, I'm going to talk about Ethereum and just generally what is the current sentiment in crypto for the whole market. I'm not going to go through charts of different altcoins today. If you want me to do that, do let me know in the comments. I will do that next week. But for the moment, as you see, Bitcoin just hit a new all-time high. It almost touched the $120,000, which is great. Everyone, of course, is super hyped up about it. After months of consolidation around the psychologically significant $100,000 mark, Bitcoin has now clearly broken out to a new all-time high. Massive flows into spot ETFs and purchases by Bitcoin treasury companies drove the price overnight to over $118,000. Additional tailwind is provided by the prospect of monetary easing in the US. A rate cut could come as soon as this month, and this is what everyone is banking on. And this, of course, provided that inflation continues to cool and labor market data remains stable, which it was kind of negative. Over the last few days, there were some numbers that came out. The jobs report was on negative, 30,000 jobs lost and stuff like that. So I wouldn't really call this very stable, but if we don't have any more hiccups, we could actually see a rate cut, and everyone is waiting for it. And this, coupled with deficit expansion under Trump's big beautiful bill, this sets the stage for a sustained deprivation of the US dollar, which is actually good news for us because that means higher Bitcoin, higher price of Bitcoin. And talking of price, let's look at some price targets. But first, a quick message from our sponsor. Stuck in traffic, doing laundry, or scrolling aimlessly again? Well, what if you could turn all that time into learning time with Herein, the AI-powered app that turns best-selling books into powerful 15-minute summaries that you can read or listen to or even watch. Choose from over 10,000 titles across 28 categories from business to psychology, all available in more than 36 languages. They condense the best insights so you don't have to. We tend to read less and less these days, and the reason is that our attention span is much shorter. I can't commit to a 5,000-page book anymore, but I do want to read it. I'm sure you can relate, and this is why I love this app. Whether I've got 5 minutes before a meeting or 15 minutes on the treadmill, Herein fits my lifestyle and my learning goals. It's smart, it's simple and always fresh, with new content added every week. Just let AI work for you and level up. Now I can finally go through those complex philosophy and science books I never had the patience for. Go check it out and use my discount code from the description below. Download Herein on the App Store or visit heard.ly. Why just read one book a month, or even worse, less, when you can cover dozens, right? The link is in the description below and you get a discount with my code, so use it. Alright, now let's go back to the chart of Bitcoin and look at some target prices. And at the beginning of this week, I already was talking about the possibility of hitting a new all-time high as soon as this week, and that's exactly what happened. All-time high. Yesterday's weekly close above the 108,000 mark was crucial as it confirmed support and paves the way to new all-time high, possibly even as soon as this week. Yes, that's right, and just as you see, we are actually on the path to 120k, which is my first target here. We aimed at that yesterday already. We went to 118,837. This is 118,892. Pretty much this is what it's showing me here. I'm looking at the price on Coinbase, so of course different exchanges would have slightly different price values here, but around 118, 119 is what we managed to achieve overnight. It was quite a strong rally yesterday because all of this pump happened from 111k all the way to 119. This actually happened in a matter of just one day. Let's go here on the daily so that you can see that we had a 4.14% increase in one day. Now, bear in mind, that sounds like nothing, 4%, but it is $4,000 at this point. So we did about $5,000 increase in one day. And then overnight, we actually managed to go as high as 118,900, which was an overall 6.78% increase from the day prior. So this is quite a big jump for Bitcoin, and everyone is rejoicing. Everyone is really hyped up about it. It is one of those headlines that you see everywhere. With that, we are also reminded that there was still a lot of shorts. In fact, as Bitcoin hit 118k, it triggered over $1 billion worth of short liquidations. So there were too many people that didn't really expect Bitcoin to be going for the 120k. And I must admit, I also thought that as we went to 114, 115, I personally expected 116 to provide a psychological resistance and, you know, just kind of slow down and hit a rejection around that price. But we pushed a little bit higher, 118, and that triggered a lot of liquidations because I was obviously not the only person who expected Bitcoin to stop at around 115, maybe 116k, but it didn't. Also, Bitcoin's ETFs saw a record $1.2 billion of inflows as the market hit an all-time high. So where does that leave us? Well, in terms of target prices, my target of 120 remains. That is yet to be conquered. We went very close to that, but we saw some heavy selling pressure as we approached the 120k. Now we are working with a lot of experienced traders as well as we have institutional investors who are not allowing the price to actually get to 120, which is a round number. It is a psychological resistance. Therefore, they start offloading before we hit that mark because it's very likely that at first attempt, we are going to see a heavy rejection at that level, which could actually push the price down. We can see a quite a strong pullback. So people who are not wanting to wait for that pullback are already starting to offload close to that price. So as we entered 119, we barely touched 119, which is just $1,000 away from 120. Many people started offloading, and this is why the price got pushed. Let's go on the shorter time frames so that we can see this exactly how it plays out. So as you see here, we did have a few pullbacks on the way up, and these were short-lived. This is the largest pullback which happened throughout Wednesday and Thursday, and then all of this here is yesterday's price action. So Thursday, in one day, we got all of this price action, and then this price action here at the top was overnight. So definitely this is quite a strong push in a very short space of time. So it is calling for a pullback. The pullback already started, as you can see. Now the question is that pullback going to be short-lived and then we continue to 120k, or is that it? The pullback is now going to be deeper, longer, consolidate for a few more days and all of that. Now, at this point, we can speculate on that because we are in uncharted territory, so we don't really have too many data points to be relying on. We can rely on indicators and patterns. We don't really have much of a pattern at this point, but let's draw a quick Fibonacci here and see what is that going to tell us. And then we're going to look at some other indicators. So according to Fibonacci retracement, we do have a decent support here at the 0.23 Fibonacci, which is sitting currently at 116. And 116 was my target. I actually thought that by 116 we're going to see a rejection and we're going to be consolidating and having a proper pullback. We didn't. We had a very minor pullback that lasted only for a couple of hours. Okay, more than a couple. Let's say it lasted for about 5 hours. And then we continued the rally. So to me, coming back to retest this 116K makes perfect sense. Now, if we see a bounce from this price, this is going to be a very bullish indicator, because during pullbacks, this is now our first target. If we actually bounce from the first target, then it's all good. That means the sentiment continues to be super bullish, and it opens the door for continuation of this rally and possibly breaking the 120K, which is, you know, a strong resistance, or at least touching 120K. So this is the first scenario. Now, the next scenario is that we actually make a deeper pullback and we go and retest the lower support, which is 114 according to these Fib levels here. Then we also have our third support, the 0.50 Fibonacci level, sitting at 113. Now, when Bitcoin is making pullbacks, these three levels are the ones that we are looking for a bounce. Now, we could also go to the 0.618 Fibonacci level, which is the golden pocket. That usually happens during a slightly longer correction or a very sharp correction. If we were to see a massive sell-off, a big dump in Bitcoin, a sharp drop in price, it could actually break all of these supports and come and retest the 0.618 Fibonacci level, and usually this is where it stops. Usually this is where it's finding the support, but we are not having that kind of a sharp drop. It's not a big sell-off or anything like that. Everyone remains very bullish. So for that reason, I'm not expecting a drop to the golden pocket. I'm not even expecting a drop to the 0.50. The first two levels, the 0.236 and the 0.382 Fibonacci level, these two prices, 116 and 114K, these are the ones to watch right now for a pullback. These pullbacks right now are going to be ideal buying opportunities. So for those of you who are still sitting on stable coins, or you know, maybe you were selling during this pump, which would be a very good strategy. I was also offloading some coins during these pumps because we know now that we are already seeing the first signs of a pullback. We are expecting deeper pullback. We are expecting Bitcoin to be retesting lower support levels, and especially the 116K. I'm not going to be surprised to see it retest over the weekend or perhaps next week. We'll see how it goes. These will be very good accumulation points. So this is what I'm expecting in terms of price for Bitcoin. And now let's look at Ethereum, because Ethereum is also making big moves, big moves. Finally, I'm actually very happy to see that. And as it reclaims the 3,000, okay, now I think it dropped again below 3,000. Yeah, it's 2,987, but it touched 3,000. And we do have this report here from the blog that BlackRock's spot Ethereum ETF has $300 million in record daily inflows. Now this is daily. At this point, Cointelegraph is also reminding us that BlackRock is currently holding over $5 billion in Ethereum. And everyone was talking about this when I was bashing Ethereum, and I was talking about the fact that Ethereum is losing its value over Bitcoin over time, and it's doing that consistently for the last few years, and it's really lost so much of its value. And this is true, and everyone was pointing to me the fact that ETFs are heavily accumulating Ethereum, which means that we are expecting a pump in Ethereum because they're not going to be putting so much money into an asset that is going to continue losing value, right? And this is a good point. But what's more important, and what for me is more interesting, is the fact that Ethereum is now going to have another upgrade. This time they will be integrating zero knowledge proofs. And let's elaborate a little bit on this. What exactly does that mean? The blog is reporting here that Ethereum developers plan Layer 1 ZK EVM rollout. They target full zero knowledge proofs across protocol stack. What does that mean? The Ethereum Foundation has outlined a one-year plan to integrate zero knowledge proofs into the main chain, beginning with an optional layer 1 ZK EVM client software that could later become mandatory. Now, why are they doing this? Well, Ethereum's push comes as rival blockchains race to integrate ZK proofs, as rollups already rely on similar cryptography across layer 2s, moving the project a step closer to what co-founder Vitalik Buterin has previously described as ZK-friendly future. And they have been talking about this for years now, at least 2 or 3 years. So I'm actually happy to see that something like that is finally starting to materialize, because with Ethereum, unfortunately, everything moves very slowly. This was the main reason why Ethereum during this cycle completely failed. I mean, now it's waking up. Yes, now it's got a chance to recover some of these losses, but Ethereum during this cycle fell to its lowest. Let me actually go to Ethereum Bitcoin, because right now we're looking at the price of Ethereum in dollar, and that's not really relevant. As we can see here, Ethereum against Bitcoin hit its lowest rate. It went to below 0.02, which is really bad. I mean, it's been a very long time since we last saw Ethereum around this price. So last time Ethereum was at this price, not the price that it is today, but just a few weeks ago, Ethereum hit its lowest point against Bitcoin since 2020. So Ethereum right now is at the same price against Bitcoin where it was in 2020, in April or May 2020. So that is exactly 5 years minus 1 month ago. Ethereum was trading at around this price that it is today in Bitcoin value. That means that holding Ethereum instead of Bitcoin for the last 5 years has not made you any increase in your holdings in terms of Bitcoin value. And as Bitcoin is at a new all-time high, you wish you would be holding this capital in Bitcoin rather than Ethereum, because you're literally at the same level as you were 5 years ago. Yes, in fiat value, things are a little bit different, but are they really? How different are they? I mean, Ethereum versus dollar right now is at 3,000. 3,000, Ethereum was at that price in 2022. So if you're a long-term holder, I'm not saying you cannot make money with Ethereum, don't get me wrong. Last time I posted about the fact that Ethereum is at the same price where it was like 4 years ago or something. Someone said that they made so much money over this cycle. Yes, because you were buying it cheaper. But if you bought it 5 years ago and you were just holding Ethereum for 5 years, you're not making any progress. You're currently at the same price where it used to be in 21. You also used to be in 2022 at this price, and it is today. And Bitcoin, as of today, is at a completely new all-time high. It's never been at that high. So you are still losing by holding Ethereum. But if you're trading Ethereum and if you're jumping in Ethereum at this point, then it will be good news, because it finally woke up. We do have the biggest Ethereum inflows happening yesterday. So definitely the interest is on fire. There is a lot of investors' appetite yet again in Ethereum, and this is good news. However, if you can see this, the volume is going down as the price is going up. This is a bearish indicator. Also, we see here stochastic RSI in the oversold region, definitely calling for a drop, a pullback, a correction in the price. And it doesn't have to happen immediately, but it will definitely happen soon. So, would it be over the weekend? I don't know. The problem with the weekend is that we do have much lower volumes, and with lower volumes, things can get manipulated much easier. I always say that there are many people who just do not trade over the weekend. I'm not one of them. If I actually see a nice setup, I would jump in. If I see that we are starting to have a pullback, I will be offloading Ethereum, because I was buying over 2 or 3 weeks ago. I was jumping in Ethereum around this price here, and now I'm ready to offload. This is the 4-hour chart. As you see, again, we are in the oversold region in stochastic and simple RSI. In fact, the simple RSI is even more important here than the stochastic, because the simple RSI moves much slower. So when the simple RSI is in the oversold region, then you are guaranteed to see a pullback. What is it, 87? Definitely above 75 is calling for a pullback. We do have a support, previously a resistance at the 2895, and I expect that a test of support is going to bring us down to that level. Now let me draw a Fibonacci as well here and see where is that taking us. And I'm on the 4-hour chart, so we're talking shorter term. Perfectly, the point 236, the first support, perfectly coincides with this level that I've drawn before, and I can't remember whether I was drawing this level based on Fibonacci's or was it from a previous support, previous price action. It is very likely, yes, this was a previous support, this level here. We retested it several times last year, and it actually was holding us several times until at some point it didn't hold us anymore. But it was a strong support, so and it was a resistance as well. So as you can see here, we actually tried to come close here. We tried to challenge this and we failed. So we tried it again here and we failed. Well, this time we managed to break through it. So now this is acting as a support, and we are definitely, mark my words, we are definitely coming to retest this support. If not over this weekend, then after that, but most certainly we will be coming to retest this support. And before I remove the Fibonacci, let me also mark the second support. In case the first support doesn't hold us, we do have a second support at 2790, so pretty much 2800. These are the two levels that I'm watching for right now. Well, this wraps everything for today. I don't really want to make this video too long, guys. And before I leave you, a quick reminder to always keep your crypto safe. Now, make sure to use a cold wallet. There's also this, I just started using this actually. It's by SecuX, and SecuX is one of the companies that are producing some of the best cold wallets in terms of crypto. They now have this key here as well, and this is for second factor authentication. It's similar to if you've been using YubiKey in the past, or if you know about YubiKey. This is pretty much the same thing, but it's produced by a crypto-centric company, and it has a PUF technology, which basically makes it unhackable. Because it doesn't actually hold any keys in the device, it generates them every time. So it's kind of every time you're doing a login, it generates a key for that login that is being erased straight after that, and it's never being held in here. So even if it's hacked, there is nothing to hack inside, because it generates these keys for a single use. Now, I'm not gonna go into too many details about how to use it and everything. I just recorded a video where I'm actually reviewing this device, but I am very happy with it, and I'm definitely recommending it to you guys, because you might be using a hardware wallet and store your coins there and everything, but your exchanges can get hacked, and your login details for your exchanges could get compromised and everything. So if you have a physical device as a second factor authentication, it is 100 times more secure than using your Google Authenticator on your mobile phone, or using texts or emails, which are the worst authenticating methods. These are hackable so easily. So definitely do not overlook security. Make sure to check out the links in the description below, where I drop the links to everything I talked about in this video. And I'm gonna see you in the next episode. Make sure you're subscribed and hit the notification bell so you never miss an episode. I'm coming back to you with another update on Monday. Until then, have a nice weekend.